Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, welcome back to the last official week, I guess, we have in April here. It has been, quite the roller coaster. Bitcoin is really outperforming the market right now, which is awesome to see. We also have, I think most people are kind of more or less numbed out to the ongoing tariff war, but we'll see how that ends up going. But today we got lots of tokens, so we will get to them. So first, I'm going to talk about Zora. So today, content creation platform Zora launched their Zora token to the public. So some history on Zora, if you're not familiar with them, they actually launched back in 2020. They were initially focused on the creation and trading of NFT assets, but they've since kind of evolved to become more of a social network for creators to coin content, as they call it. So you can think of them as like more of a generalized tokenization platform. They've been very big within the kind of Coinbase ecosystem. They are running on the base L2. And so as a result, they've gotten a lot of kind of marketing support over the years from Coinbase team. So the Zora did end up kind of getting back in the media's or market's attention in the last week because Base, the layer 2 for Coinbase, announced basically used their token creation tool to create a Base meme coin. Essentially what they did is they called it a basis for everyone token. It was meant to be a content token that was kind of just more of an experiment. Zora allows people to essentially create content using like a tweet. And so that's what they did. The Base team was quick to kind of support the token, but a bunch of people saw it, assumed it was, kind of a more serious trading or financial based token, and piled in. And the token quickly soared to $13 million market cap before crashing about 90%. So of course, you have traders online claiming Zora or the Base team rug pull to this token. This should have been, more efficient. And then a lot of people kind of came out and said, this is really just meant to be more of an experimental thing. It's meant to be more content based. It's meant to have, more fun value and not trading value. That has sparked a huge debate online. But for that reason, Zora was kind of back in the media's attention this last week. It then came out on, I believe it was Monday. Zora publicly announced that they're going to be launching their token, which is for fun only and does not entitle its holders to any governance rights or a claim on any equity or ownership in Zora or its products. So this was obviously, again, like not the best move for Zora. I think a lot of negative kind of PR ended up like getting attached to their project, and especially launching a token that most were saying, okay, it's just for fun, when they have such large equity backers, really made a lot of folks question it. So the market's reaction, the market's appetite for such a product, though, was pretty clear today. The project listed at about 68 million, and it's since declined to 52 million. And the token price is down about 38% this week. Zora is really just the latest in a string of launches that have really not necessarily captured the market's excitement, and is definitely, feels more like a disappointment to a number of folks. The Zora did do an airdrop campaign. They gave tokens since they've been live since 2020. They had a lot of, retroactive kind of user rewards to give out, and that's how that one went. So like I said, Zora down 38% for the week. Okay, next we're going to talk about Mantra, which is OM for short. So we didn't talk about this last week, so I'll have to give you a bit more background because this has been over the last 2 weeks. But on Monday, the CEO and founder of Mantra, John Mullen, announced that their which is Mantra, by the way, they're an RWA-focused Layer 1 protocol. The founder and CEO announced on Monday that the project's going to burn 300 million tokens half of which were of his personal holdings. So the token burn comes on the heels of a big price collapse in the OM token about 10 days ago. The team initially came out and blamed low liquidity and shorting on centralized exchanges for this token collapse, while the community accused the team and early investors of selling their tokens into favorable price action. A further debate, though, was spurred about the fact that most of OM's token supply is not freely traded on the open market, and therefore its fully diluted valuation and price are really easy to manipulate. This is obviously not great. For context, if you weren't following this news, the token was trading, the project is trading at about a $6 billion valuation as of April 13th. And this flash crash brought the token valuation down to about 600 million in market cap. So a massive destruction of value there. The community's really had mixed reactions to it. There's been a lot of backlash. Unclear, again, like, was this because there were insiders selling? Was it because there were people pushing around the price on centralized exchanges using perpetual futures? Was it because this was just a much smaller circulating supply than advertised and it was easier to manipulate? Really unclear. But the company is trying to get back on the right track by this token burn. The community did have mixed reactions, though, to this news. Token is still down 30% this week, and it has fallen 80% since the April 13th incident. All right, now on some better news. Last week, interoperability protocol Layer 0 announced that they received a $55 million investment from the venture firm Andreessen Horowitz. So the investment was essentially a secondary sale of ZRO tokens that includes a 3-year lockup. If you haven't followed, Layer 0 has raised several large funding rounds, including rounds in 2022 and 2023, raising 135 million and 120 million respectively. So now adding to that another 55 million, they really have quite deep coffers for their project. So like I mentioned, they are an interoperability protocol. They currently act as the communication layer for about 125 blockchains, and they've assisted in 75 billion in asset transfers to date. Large investments like this really just show the influence and power that Layer 0 has, and the expectations that will continue to grow over the next several years. The ZRO token was up 15% this week on that news. Okay, last up we have Immutable X. So Immutable X is a Layer 2 gaming focused chain. They announced today the launch of Might and Magic Fates game in partnership with Ubisoft. So Immutable announced this partnership with Ubisoft a couple years ago, but today actually marks the first time that partnership has been brought to the market. So in this case, the Might and Magic Fates franchise, which has been around for about 40 years, will actually be brought to the IMX chain as a trading card game. So in a post from the company, Immutable expects this partnership to massively increase their monthly active users on the platform, and bring in lots of new users who are not crypto native. So we'll see how that turns out for IMX in the coming weeks, but the token is up 46% this week. Okay, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.